Hey team, Coinbase has a mixed reputation in the crypto space. Founded in 2012, they were very early to the game and made it easy for a lot of people to buy their very first cryptocurrencies. But they also have a long history of being totally unhelpful to anybody needing help, including and especially their customers. And now it looks like there's some actual nefarious activity happening behind the scenes. I'm talking about insider trading. Let's take a closer look. There were several blockchain sleuths who uncovered all of this, but it first came on my radar in a Reddit post from u/DragonDude4 on the cryptocurrency subreddit. Full disclosure, I am not personally technical enough to parse these blockchains myself. I can't independently verify all of these claims. I am but a humble media professional. However, here's what people are saying. To quote his post, earlier today, April 11th, Coinbase made a transparency post naming about 50 assets that they are planning to list on their exchange. Sidebar clarification, these are tokens Coinbase is considering for listing, but they've made no firm commitments to list any of them. Okay, back to the post. Most of them are illiquid coins that no one can figure out why they are even listing in the first place. Totally valid observation, u/DragonDude4. Among the many criticisms of Coinbase is that they've become a casino for small market cap coins, at least 10,024 of them by last count. I worked for a crypto startup in 2017 and 2018, and our CEO had at the time what seemed like a very impossibly audacious goal, getting our token on Coinbase. That was a big deal in 2018. Now, Coinbase is like, sure, we'll list your Chuck E. Cheese token, why not? Okay, back to the point. A bunch of people on Twitter went digging on-chain and found out that there is an insider that has been buying massive positions in these tokens, which have all obviously skyrocketed after the announcement. If you're not familiar, this is the Coinbase effect. When a token gets listed, retail buyers, average Joes like you and me, we suddenly have access to these tokens that otherwise would have only been available in certain jurisdictions or on obscure exchanges or would require multiple trades to get any access to. But when they get listed to Coinbase, the price for these tokens usually jumps up quite a bit. So if you're an employee at Coinbase and you know which coins might get listed, you might be tempted to do some insider trading. The post goes on to link to several Twitter threads on the topic, including a post from @Kobe, a rather notable personality in crypto Twitter. From Kobe, found an ETH address that bought hundreds of thousands of dollars of tokens exclusively featured in the Coinbase asset listing post about 24 hours before it was published, ROFL. Another post from our old friend ZachXBT on Twitter adds to the riddle. Found a related address that also bought XYO, FOX, and RGT before their Coinbase listing announcement as well. ZachXBT has a solid record for calling out bad actors in the crypto space. We mentioned him in our last video on the NFT rug pull involving David Dobrik, Floyd Mayweather, and a bunch of other influencers. He's a very good one to follow, ZachXBT. Yet another post from Max Seraphin, aka Crypto Max, says, someone made a fresh wallet and front ran 7 figures into UPI and AVT before the Coinbase announcement of listings. Makes sense now, clear insider trading going on behind the Coinbase doors. Okay, is this insider trading? Maybe, probably. There was some speculation that Coinbase might be buying these tokens in anticipation of their listing, just so they'd have liquidity. But the general consensus among the replies to these posts is it doesn't look like that's what's happening. These are heavy buys just hours before the Coinbase blog post went live. And honestly, there is no rock solid way to stop a knowledgeable employee from insider trading. They might lose their job, they might face prosecution, but only if they get caught. Listen, we know that insider trading happens, and it happens a lot. In fact, we're probably more aware of it in crypto/blockchain than we would be in conventional markets, because we have an immutable blockchain to see the whole record. If somebody wanted this to be invisible, they'd have to figure out a way to do it all off-chain, which would entail collusion from parties that already hold these tokens. It just isn't feasible. A good follow-up question is this: how much insider trading happens in conventional markets? Because it happens. We just don't hear about it unless it's a notable personality, like Martha Stewart, who was prosecuted for insider trading for trades that she made in 2001. She avoided a loss of $45,000 by selling all her shares in a stock after her broker at Merrill Lynch gave her some inside info. Frankly, that sounds like a paltry sum compared to the scams we hear about today, and she served 5 months in prison for that. Or, a much more current example, Speaker of the House Nancy Pelosi. Is she insider trading? Technically, maybe not, but her husband has done very well for himself investing in stocks of public companies that she has a hand in regulating. It's been so successful that plenty of anons on Wall Street bets are ready to follow her trades with a Pelosi index. So, should any of this surprise us? No, probably not. not. This isn't even the first time Coinbase has had this happen. Back in 2017, Coinbase felt the need to investigate their own employees for insider trading, and the government also got involved then. Quote, "The Commodity Futures Trading Commission today issued an order filing and settling charges against digital asset exchange operator Coinbase Inc. of San Francisco, California, for reckless, false, misleading, or inaccurate reporting, as well as wash trading by a former employee on Coinbase's GDAX platform." Guys, this is rampant. The exact same thing happened on OpenSea just last fall, which makes sense because OpenSea is absolutely using the Coinbase playbook. Seriously, they are mirror images of each other in their development, in their growth, and how they operate. And as we noted on this channel before, NFT exchange LooksRare was doing wash trading out in the open, not even really trying to conceal it. In a market that's barely regulated, I think the temptation is just too high. If something is punishable by fine, what they're really saying is it's legal for a price, and that's just assuming you get caught. If you can make gobs of money and not go to prison, well, a lot of people are going to go that route. Not everyone, for sure, but enough that you can expect it to happen consistently. So, what does that mean for you and me? For one, these aren't really scams in the sense that you have individually identifiable victims, but I don't think anybody would call this fair game. Whoever is doing these inside trades and wash trades, they're breaking the rules and they know it. So if you're out here in the wild, wild west of cryptocurrency, then watch your back because there's no honor among thieves. Really, I've been scammed a couple times. It sucks. Let me know in the comments if you want to hear more about those stories. One of them was quite recent. And lesson 2, I know we all want 1000x gains, but understand that risk and reward go hand in hand. Evaluate your risk tolerance, understand what you're willing to lose if things go wrong. There are good, honest ways to make lots of money in this space. Join a DAO that's doing something interesting. Stake your tokens in a profitable arrangement. Heck, mine fiat money in your day job and dollar cost average into top market cap coins. Bitcoin is a better savings account than your melting dollars. That's a square, fair, straightforward way to make money. But there are plenty of dishonest ways people make bank as well. The haters, the detractors, the people saying that this is all a scam, they aren't entirely wrong in their criticism. It's the Wild West and bandits are everywhere. Get educated and watch your back. What do you think, team? Do you want to hear more about scams or wash or insider trading? Or should we get back to basics and fundamentals? I'm leaning that way, seeing as almost everybody, myself included, needs to strengthen their base in this stuff as there's an increasing explosion of more and more complexity. Let me know what topics you want to hear about. Hit that like button, subscribe, click the bell, tell your friends, call your mom and tell her you love her, and we will talk again in the next video. Thanks, team.